All right, hey, what's going on, guys? So, I bet you're wondering right now, like, what is Forex? What is this, what is this thing you keep talking about? And like, I get what you're saying, and is it like a stock or something like that? No, not necessarily, but it's similar. It's very similar to the stock market. Okay. Um, Take it to the charts, but this is what I'm gonna go ahead and do. I'm gonna go ahead and share my screen first, so that way you guys can see what I see. See what I see. Yep, do as I do. What do what I be? Yeah. All right. So we're taking it to the charts. What exactly does this mean? This basically is saying that the price moved up or down. This is basically what the chart is saying. You guys probably are familiar. If I'm more familiar, if I were to go ahead and change it up like this and it looked more like that, and then most of you guys would still think, oh, this is just stocks. But no, not exactly. This is not exactly stocks. This is very similar in a sense because it is a financial market, but this is not necessarily um, you would not consider this a stock. Okay, the main difference between these two. Okay, market. What are you trading? You're trading a stock. Okay, so I'm gonna go ahead and down like this. All right, stock market. What are you trading? You're trading a stock, right? This don't have to be perfect. Okay, so this one right here, this other corner here, this is going to be the stock market. Okay, we'll write stock there from now. This right here is going to be Forex. Okay, people a lot of times tend to use FX for short when they're talking about Forex. Okay, so what are some of the things that you're looking for when you're in the stock market? Okay, some of you guys may know, if you're a stock trader, you make your money whenever you buy a stock. So whenever you buy it, you make your money. Buy to money. Okay, which means whenever I say you buy it at discount, when you make your money is whenever you buy the stock. That means when you buy it at discount, um, you're basically making your money on, for example, if you were to get something while it was on sale, and then later on it went back up to normal price and someone was looking for that same product, and you can go ahead and sell it back to them in exchange for the retail price without tax. That's basically what you'll be doing, whenever I say you buy it and you get your off of whenever you purchase this item. Okay, so it's very similar in that way. It's very similar to real estate as well. Okay, what's going on in the stock market? Whenever you're buying a stock, you're buying basically you're buying a share into a company. Okay, so it's dealing with companies. Okay, so then what's something some other things about stock market that's different from this. Okay, the leverage is not nearly as high. Okay, which can be a good or it can be a bad thing. Okay, how much moves through the stock market every day? The U.S. stock market about 50 billion moves through the stock market a day. So those are just a few things about the stock market, a few characteristics. Okay, whenever it comes over to here, it's this um, for right now. Okay, how do you make your money? Market. Okay, you don't necessarily make your money on buying it on discount because you could trade the price of you can trade the price either way, whether you're buying the euro or selling euro in the market. What's going on is you are making your money whenever the price changes. Okay, you're making your money based on the exchange rate changing in your favor. So let's go ahead and write exchange rate changing. Okay, and when the exchange rate changes in your favor, that's how you're going to make money, on your side of the trade. Okay, whenever you're looking into stock, looking at a company, but whenever you're looking into Forex trading, you're not looking at companies that you'll be investing in. You're actually looking at currencies. So when you're looking at these currencies, you're not necessarily looking like, okay, this is doing really well. I'm going to go ahead and buy it, hold it long term, or at least not in the way that I'm going to be showing you guys how to trade. Okay, so let's go ahead and get back over here to our list. The leverage. Okay, you can have really high, which can be a double-edged sword. Okay, like when I say that, I mean it can work for you and it can work against you, because if you don't really know what you're doing and you place high leverage on your account's most likely going to disappear within the next few days because you don't know what you're doing and you're over leveraging your account. Okay, but if you do know what you're doing and you're leveraging your account right, you can grow your account very quickly, which is what I'm going to be showing you guys how to do. Um, and I don't encourage it unless you absolutely know what the market is going to be doing. But I'll get more into that later on with the method. Okay, how much money moves through the foreign exchange markets every day? About, on a rough estimate, about 5 trillion through the markets a day. So this is like a teacher's pay compared to NFL football players' pay right here. That's the difference between these two markets. Okay, and it's crazy how this one's the one that's, more is more popular, or I'm not gonna say more popular, it's more well known these days, to where people think that Forex traders, whenever they get their laptop out, like me, and I'd start doing homework, so they're like, oh yeah, you do stocks. And after a while I tell them, like, I'm not really trading stocks, this is like, trading currencies, I'm doing foreign exchange market. And then about a week later, it's like, oh yeah, how's stocks going? So on and so on. That both of these have in common. Okay, both, you can invest, you can make profit. Okay, so you can make profits in both of these markets. Profits are way better than wages. Oh my gosh. You have no clue. I couldn't make $800 in one day at my job, but I've had $800 days in the past trading. I can't um, decide how much money I want to make at work today, but whenever I go into the market today, I'm like, okay, how much do I think I want to risk, to get this reward? I can look at things like that. Okay, so both, profits over wages. What are some other things about these that are in common? You have a broker account, which allows you to invest, and your broker is basically the account that holds your money and that you go through to place the trade and make withdrawals and deposits. So you can put money into your account and take money out of your account. They're a little bit different, but in the same sense, they are the same. Um, so let's go on. Let's see, what else do these both have in common? Both of these can make you a millionaire, which is very true. There are a lot of people who are millionaires in the stock market, and also people who are trading Forex. Um, they both take time to learn, okay, to get these overnight and just become a master at trading stocks or a master at trading Forex or in any financial market without the proper training and without going through the process. I'm gonna let you know that it's not gonna happen. It's not one of those overnight things. And take it back to the chart real quick, and I'm gonna explain some of these things really, really fast. Okay, so basically how this is going on, okay, this right here is your chart. Whenever you get your chart up there, whatnot, you can customize it and upload indicators to help you see specific things in the chart, okay, that you can't see with your naked eye. So for example, if you wanted to move into equation. Okay, you want to put these moving averages into equation to show you, what was the previous last 50 candles. Where's the average of the last 50 candles lining up on this chart at the moment? Is it above or is it below? Things like that. Um, let's go ahead and show you guys what exactly I mean. Okay, that right there was the same exact chart. I'm gonna zoom out so that you guys can see it from the same exact view. Okay, that right there is the same chart. Difference is this one has indicators on it to help you see specific things that you're looking for in the market, to help you identify patterns and such. You can go through and customize your template indicators so that you can see specific things to the naked eye and be able to identify patterns. Okay, what's the difference between, let's go back, difference between that you might notice, okay? A lot of people who get into stocks are looking to trade long term, okay? A lot of people who get into the foreign exchange market are looking to become day traders. Okay, and there's a very big difference in between there, between a day trader and someone who's looking to hold a trade for long term. This right here is not every single stock trader, but the majority of stock traders are looking to hold their trade to have a profit off of that stock. Okay, and then with day trading, you can hold that stock or not stock, you can hold that trade for less than 2, 3, 4 hours and have a very good profit off of that one trade. Move in a day, I can consistent if you can consistently pull out pips from the market, say about 50 pips a day, what that does for your account is you get that consistent growth, and it'll be much, much quicker than if you were to be looking to grab, move from here to way up here. Which one do you think you're going to grab more money on? Trading this to this, and then this to this, and this to this, and then this to this. That's, basis, just grabbing one trade that's like inching your way up here. You're going to grab way more pips than you would, just from here by being able to trade from here to here, here to here, here to here. Same thing here to here, here to here, and so on and so on. Okay. Being a day trader in the foreign exchange market is going to be very different than actually holding your trade long term. So the way that I trade and the way that a lot of my friends trade is we look for our setup within the day. Okay, so we see the high of the day is being set. We're looking to trade it down to the low of the day. So we see it being set, we take our position, and then over the course of about 3 hours, usually we have our take profit smashed to, we're looking at the chart, like analyzing it. Okay, this was a good trade because this is, or if our stop loss was hit, this was a bad trade because this, such and such, somewhere along those lines. Okay. Now, moving on from those two, one thing that you may notice very, very different about these two, which is completely obvious. You realize it, but foreign exchange market, basically what it is, okay, you go to the airport and you see this big board. And this big board has a million different types of currencies up there. Okay, and it says like what the exchange rate would be for the euro from the US dollar, from the US dollar, from the pound to the US dollar, from the New Zealand dollar to the US dollar, from the Canadian dollar to the US dollar. And it gives you some number over here on this side. Okay? It gives you some number over here on this side. Now imagine whenever you go on vacation, okay? You exchange the US dollar. Ooh, let me get my pen out. All right, you exchange the US dollar for the euro. Okay, whenever you exchange the US dollar for the euro, it converts over and they give you $1 cents or €1.05, you know, however you want to, however you say it in euros. That's your conversion rate for the US dollar. So you're switching this to this. Right there is what's coming out. Okay, whenever you get back from vacation, whatever happened, they had an election and the price went up for the euro and it went up to 1.07. Okay, while you were gone. Okay, and say you were just gone for a week. Well, the price went from here to here, and whenever you got back, cashing on a little bit of profit. Because let's say you had 1,000 US dollars. You had 1,000 USD. Okay, and that converted over 1,050 euros. Whenever you came back, you spent 100 of the, you spent 525 of these, and you had 525 left. We're just using a number for argument's sake. You had 525 euros left, and then whenever you went back to exchange, what ended up happening was you banked off of some of this profit, because since the exchange rate went up, what pretty much happened was the value of the dollar decreased. So since the value of the dollar decreased and you still had this in euros, getting it back and exchanging it for 500 US dollars, banked a little bit of a profit, and you exchanged it and you came back with $110. Okay, so imagine that little change right there gave you 10 cents. On a bigger scale, actually using the market to to um, to get you more profit than that, you could have a $500 trading account. Okay, and you place a trade, and on this exact move right here, this got you 200 pips on a 10-cent trade. Trade, you caught 200 pips. What ended up happening was you made $200 USD from that jump point from 2 pennies off of the exchange rate changing 2 pennies. You made. So that's exactly how market is going to help you cash out on the profit of exchanging the euro to the US dollar and back, help you cash out on profits from just the exchange rate changing. Some people call it cheating system, call it whatever. It's completely illegal. If the government didn't want you to do it, you wouldn't be able to. A really basic, explanation of what trading is, and basically pretty much it. No, you can look over here and see the big board just like it is. It's similar to how it is at the airport. These aren't the exact exchange rates because they're going to have to cash out on a little bit of profit at the airport. But this is pretty much straight and to the point, and it's going to get you to where you need to be. If you know exactly how, what I'm going to be showing you guys. Thank you for tuning in, and you guys stay blessed and take care.